Welcome back to MTVTA, guys. I'm your guys' host, Trent Manager, and today we have a very special video covering Nexo's platforms on crypto-backed loans. We're going to be going over what a crypto-backed loan is, how it is utilized in the ecosystem for our benefit, and also some tips and tricks to keep you guys safe and also utilize them in the best manner. Into our first slide, guys, we're going to actually be going over what is crypto lending. So crypto lending is a little bit behind the backside of crypto loans, and we're going to go into the details so you guys understand fully exactly what crypto lending is. So a cryptocurrency backed loan is used as digital currency as collateral, like a security-based loan. The basic principle works like a mortgage loan or auto loan. You pledge your crypto assets to obtain the loan and pay it off over time. You can get this type of loan through a cryptocurrency exchange or crypto lending platform. While you retain ownership of these cryptos, you've used the collateral. You lose some of your rights, such as the ability to trade it or use it or make a transaction. But if the value of your digital assets drops significantly, you may end up owing back much more than you borrowed. So therefore, it should default the loan. People may consider crypto loans because they have benefit and provide because they have no intention to trade or use their crypto assets in the near future. So let me actually clarify this second point here. So yes, that is true with the drops in the crypto markets, somewhat like we've seen today, that if your collateral does go under a certain threshold, that they will start making automatic payments. But as we go further along in the PowerPoint, we're going to stress that and kind of give background as to how that can be offsetted. Now, dropping down to bullet point, actually number 3, we are going to clarify that a little bit as well. So if you are a long-term holder or someone who's been in the market for quite a while, this also can be very beneficial to you as you have no intent of using your crypto assets in the future or selling, so you can put those up as collateral to further expose yourself in the markets without having to give up your current position in time in the crypto markets right now. So you can see how that can be very beneficial in terms of you wanting to look into other DeFi projects, other blue chip projects as well, and not want to lose your position currently and leverage yourself in the current markets without having to lose that position. I did realize, actually, this PowerPoint is a bit of a mix of cryptocurrency lending and a crypto-backed loan. So let's clarify just real quick cryptocurrency lending. So lending, just simply me as to you. Let's say you are the big bank or the institution. I'm going to come to you and say, hey, I have some extra stable coins, some extra BTC, or some extra ETH. I would like to earn some higher yield and some passive income and lend out my cryptocurrencies to X individual, whether that be an institution or another him or her entity. You are going to lend those out since you are taking the air quotes, as I'm doing now, the risk of lending out your cryptocurrency and not having that in your custody. They are going to pay you a higher interest yield for the air quotations again, risk that you are lending out to an entity that you do not know personally. So that is where crypto lending really does come in handy. I do it. I know plenty of other cryptocurrency holders do it as well, and the yields can range from as low as 5% all the way up until about 30% APY. Of course, we've gone into some lucrative DeFi farms as well, and some other centralized exchanges who offer a very base of 12 to 12% on your stablecoins, and of course other Ethereum BTC pairs can be as high as 8 to 10% as well. So just wanted to kind of get that out of the way just quickly, but let's go down into the bullet points, into the boxes, and see what else we can say. So low interest rates, while they are generally not as cheap as mortgage or car loans, crypto loans are inexpensive alternatives to personal loans and credit cards. Some loan amounts is based on the asset value, so we talked about that earlier in our PowerPoint. In many cases, you can borrow up to 50% of your portfolio, but some exchanges go as high as 90%. Of course, depends on the platform, and we're going to get to that as we continue further. Choice of loan of currency, depending on the platform, what you need, you can generally get the loan funds in form of US dollars or select cryptocurrency, whatever you'd like. BTC, Ethereum, Tether, USDC are all available. Oops, so sorry guys. Ability to lend crypto. Many crypto exchanges offer interest accounts that allow you to lend your digital assets and receive high APY, sometimes upwards up to 10% in return, just like we did talk about. Hope that was very clear, and if any questions you guys can of course ask. Fast funding. Once you're approved, you can get your loan fund as little as a few hours. That is a little bit long. I've done it and I'm still doing it. It takes about less than 5 minutes. So no credit card check required. So the cool thing about cryptocurrency lending platforms, and we're going to get into to that further as we go into the traditional versus crypto-backed loans, well, what the benefits and pros and cons are. That cryptocurrency lending platforms do not need credit checks or any backdoor history in terms of if you've been bad with money, or you get a bad credit score. It's just based off the collateral that you are able to put in your account and that you have available. So just like we covered up here in the loan amount, it can be as high as 90% of your portfolio. But of course, just like we talked about in slide 1 and 2 as well, that if there is a slide in the market like we are having today with a very, very bad red day, your collateral may activate and you will start making payments automatically on that loan if you do not keep the collateral up to date as to what the threshold is for whatever that platform may be. So if you need to replay that, you definitely can, and we're going to be stressing this a lot so you guys can really understand this, because it's not very hard, but there are just simple tips and tricks to keep you guys safe, as that's the most important part. But in terms of versus traditional and crypto-backed, the crypto-backed loans are going to have a lot quicker and more catering towards the borrower. So crypto lending platform exchanges typically won't run a credit check when you apply, make it incredibly attractive for financing option for people with poor credit or no credit history. So I know as myself also as a younger, kind of newer college grad, that of course I've been working on my credit, but of course most college students and young adults do not have a solid credit check yet in terms of history and payment history. So this is also a very, very good outlet in terms of those who just don't have that proof yet to show exactly what or how responsible they are, or what they can do for that platform. So things to consider before engaging in cryptocurrency lending. So we talked about a little bit of pros and cons at the beginning. So here are some of the bullet points. So first off, going to be no access to your assets in terms of lending. This is the lending slide that we're going to be talking about now. As long as your loan has an outstanding balance, you cannot access your holdings to trade or transact. That of course does vary by platform. I'm going to stress that a lot because every platform does have different mechanisms in terms of their operation agreements and so on. Not all digital assets are eligible depending on the crypto lending platform you can use. You may need to exchange your current currency for an eligible asset, so that is also very true. So some Dogecoin and some other lucrative assets that may not be as stable in terms of Ethereum, Bitcoin, Aave, and some other blue chips. That is of course a no in some platforms in terms of them wanting to lend you out BTC and put your collateral up as Dogecoin. They may not like that very much, but also on to the third point as well, interest accounts aren't insured. So if you're lending your own digital assets, the funds in your crypto interest accounts aren't insured like the money in your bank. So of course, again, let me rephrase that as well, is that is depending on the platform. I know Celsius, Aave, and a lot of these others DeFi platforms do have a small insurance fee that you can pay per month, and also the centralized exchanges are now starting to move more towards FDIC insurance as we have been getting more regulation clarity. And of course, the bigger platforms such as BlockFi, even some Celsius and some other DeFi platforms have now started to have some backing and some cushion for those investors, as that does attract more people for a safety net in case things do go a little bit south. There is some insurance there to help out if things really do go. Onto the fun stuff, guys. This is where things get a little bit complex, but also interesting and very, very sweet. So getting paid to borrow, Trent, WTF. So I actually have on the left side here a crypto loan calculator, which is Nexo's platform's crypto loan calculator, that where you can input your loan amount, your loan offers in terms of your APR and your LTV, and you can see what your average monthly payment would be and overall the year in terms of interest of what you would be of what you would be paying. So you can see just on the left here, let's kind of break down this slowly here, so everyone can understand this clearly. First off, what you probably notice is the APR rate. You're like, wow, that is very, very low. So for an $1,000 loan, you're paying $5 a month. So let's continue to break this down even further. So total interest paid over the whole entire year, you're going to be paying $59 if you do not decide to pay off that $1,000 loan for the entire year. So as we get more into the slideshow, we're going to be comparing the traditional finance interest versus the cryptocurrency interest, and you're going to see a drastic difference in terms of how much you're paying per month in the entire year, and how high the APR rates are in the traditional finance world, and what makes these so attractive to investors like myself who've been in the market for a while and would love to benefit from a small monthly payment of $5 a month for us to leverage, such as $1,000 in the crypto markets. We've seen throughout the years just $1,000 a year ago or 2 years ago in Ethereum Ethereum or Bitcoin, would be worth, 5, almost 10x now. If I do remember right, some of my numbers of some of the prices we were at last year, Ethereum was close to, $250 about a year and a half ago. So you can see how the leverage positions in this can, really outweigh the risk in terms of your reward scenario. So let me not get too much off topic. Let's go back into the total, the PNG we have here. So the collateral you would need would be 0.04 Bitcoin. And of course, we talked about having whatever your account is worth between 60% to 90% down to 50% in terms of borrowing your overall portfolio total. And we have some other small notes down here in terms of your margin call and your collateral value. So you can see just on the left here that we have a 55% LTV, loan to value ratio, and next at a 5.9 APR, which is absolutely astonishing. So we're saying we're paying $5 monthly to have this loan outstanding continue month to month. And this was actually my very first loan I ever did. So this is actually a pretty live version. So let me actually throw up some other charts on here that are going to make a little bit more sense as to how you can get this such low APR. So I'm going to be dragging over real quick this Nexo's loyalty platform explained. I currently am platinum just for the reasons I'm going to explain. So the requirements for some tiers, I'm going to kind of go a little bit slower here because this is just based off the Nexo platform. This is not based off Voyager or any other lending platform, but they do they're very competitive in terms of trying to offer the best rates and the best overall loyalty programs. But in terms of right now, after all my research, Nexo is currently in my eyes the best overall lending platform right now, and in terms of earning interest and also taking out crypto-backed loans. So let's take a look at each tier, and we can see how the benefits continue to increase and how they can really benefit you leveraging yourself in this market. So base, you're going to have your base tier. No Nexo tokens are needed to receive any benefits. So as we go down further, I'm going to explain this. At silver, at 1% of the portfolio balance in your account must comprise of Nexo tokens. Gold, at least 5% of your portfolio balance in your account must comprise of Nexo tokens. And platinum, at least 10% of your portfolio balance must be Nexo tokens. So also they have a side note down here. The portfolio balance is the value of your credit line, and savings in the wallet. The loyalty program, base reward tiers, the ratio of the Nexo tokens versus the value of all assets in your portfolio balance, which will need to at least make it 1, 5 to 10% respectively for each tier. So pretty simple to understand. Nothing too out of the ordinary there. That's usually how most loyalty benefits come. So this is for my visual learners, I know, because I'm a visual learner as well, and I'd love to see the little charts and everything. So you can kind of just see here. I'll give you guys a minute, just look it over. I'm like I said, I'm currently platinum, so you can see kind of the benefits you get here. So silver, you're getting 2 free crypto withdrawals per month. Gold, you're getting 3 free crypto withdrawals per month. And platinum, you're getting 5 free crypto withdrawals per month. So that's very awesome. And if you guys know anything, if you're moving around a lot of crypto, a lot of liquidity, you know that a lot of those gas fees can really hurt, and those transfer fees can really hurt you pretty bad. I know BlockFi is only about once a month, and they don't even have any tier system either, and I use BlockFi quite considerably, so it kind of gives you that incentive to really just stick on the platform. But Nexo, I like Nexo because they're very flexible. They realize, hey, actually we'll give you 5 withdrawals a month if you stay up in platinum. And to have those Nexo tokens in there, guys, it's about $1.25 right now at current price listing for those Nexo tokens. So I mean, it's nothing crazy out there. I think it's about $130 just to stay in the platinum tier. And of course, on top of that, we're seeing the percentage APYs down here as well from month to month, and 3 months kind of see some adjustments here. So now if we zoom in, we can see our APY bonuses start going up. So in terms of your Nexos earning 12% APY per year, as long as it stays in your Nexo wallet, and of course your other assets as well start taking a boost as well as you kind of go up tiers from silver to gold to platinum as well. So before we go over to the Nexo credit calculator and the crypto loan calculator, do kind of play around with some numbers just to give you guys an example. There should be a flashing screen recording here. I just couldn't find it on the web, so I just had to go into the app and screen record. It's going to be showing you the base tiers all the way to the platinum tiers, and show in terms of the benefits from going from base to platinum. So just from a personal platinum member myself, I can tell you just right now, just off the base tiers, going from base to platinum, there are some significant benefits that are really going to help you in terms of leverage this market and just really overall just give you the better bang for your buck. So, at the base tier, you're sitting at 13.9 interest borrow rate. That's a significant difference from the 5.9 to 6.9 that we just examined on our cryptocurrency calculator, and then slowly going up into silver, which is the 1% to 5% of your tokens portfolio. That's going to be showed up on the screen as well. So the borrow rate is going to be sitting at 12.9, and all your other cryptocurrency savings, interest, and assets are going to go from 4% to 2%. Your fiat currency savings interest from 4% up another 2%, and stablecoin savings interest from 8.25 up another 2%. So as we continue to go up to gold as well, you're going to continue to see the increase from 4.5 to 2%, and as the APYs just keep getting higher, the APRs keep going down as well. So from a gold perspective, you're sitting at 8.9 now, and then we go up to platinum again, we are sitting at 6.9, and that's all going to be on the screen here. So you can kind of just examine on your own account and your own risk tolerance and kind of your overall goals in this market and kind of see if this is going to be worth it for you. From a current platinum member and who's been utilizing this platform for quite a bit, of course, I'm going to be very biased in terms of saying the platinum is by far the best deal for such a little amount of Nexo tokens that you do have to deposit and keep in there, from the benefits of five crypto withdrawals a month, which is awesome. Your savings rate, Nexo savings rate is 7%. Your stablecoin interest up from 10 to 12%, plus another 2% on your Nexo tokens as well. So Nexo tokens are sitting at like 12% APY, and I just believe the platinum is going to be your overall just best value. So just wanted to get that out there, just so you guys are not confused. And I know some of you guys are visual learners as well, and so am I. So I know that's very, very helpful for a lot of you all. So first off, let's go into our actual crypto loan website here, just so I can show you guys the real ins and outs, and we can play around with different numbers here. So this is the same screenshot that we had in our PowerPoint, and we're going to go over to this one as well and play around with some other numbers as well, because Nexo does have their own little credit calculator for those gurus who want to just make sure they're staying on budget, which is nothing wrong with that at all. So we can just play around with this. I mean, you can even just let's do around a little $2,000. We can play around with different APRs. Nexo's on here, Celsius, BlockFi's pretty high for BlockFi. Celsius isn't that bad, 6.26, really good. BlockFi's still on here. It kind of goes by LTV ratio, loan to value ratio. So of course, like we said, the continued whole overall of your portfolio just depends, from 33% to 50 to 90. Like we talked about, every platform is very different in terms of what they're going to allow you to do. So, but you can see the APR difference in terms of what's going to be worth it for you. But of course, you can see Nexo is by far some of the the best APR that you can get with the best loan to value ratio as well. Some of them are only 50, 35, 33, 25. BlockFi very low on the 20% side, but 6.5% APR. So it really is a trade-off for you. Whatever, would you like to borrow more at a higher interest rate, or would you like to borrow less at a lower interest rate? So it really does depend truly on you. So we're going to go with Nexo just for this one because that's a platform we're doing. So if we calculate that, we can do a $2,000 amount loan at a 55% LTV, and Nexo at 5.9 APR, which is phenomenal. We can put our collateral in Bitcoin just for the easy route. So kind of just gives you a breakdown. Is here. I'm just playing around with some numbers to give you guys a visual learning representation here. So total interest paid over the entire year is going to be $118, no matter what. So take that. We're going to divide $10 just by the amount of days. So 10 divided by 28. You're going to be paying around 35 cents a day, just to keep this loan outstanding. And of course, like it says right here, $10 a month. I mean, not exactly how sure a lot of you guys have been in terms of car payments or credit card loans. And we're going to go further into the traditional banking loophole, and we're going to see really just how drastic the difference is from having a crypto loan outstanding and a car payment note or a credit card payment out, or just an overall business loan, to see the difference of the interest payments and how how stressful it could be in the traditional world just to even get something as small as this. And just a common reminder, guys, also as well, is that most banks don't usually do loans less than $10,000. I mean, you might get lucky in terms of that you can maybe get a $5,000, but most banks are going to snub you away for anything under 10K. So the idea that a lot of these platforms are catering to smaller loan individuals, people who just need something to lever themselves for the next couple months, is a very, very good thing, and absolutely can help you out in the long run. So. And as well, we're going to be going over to our Nexo credit calculator. This is a kind of more in-depth one as well. I just have this up here, so let's just, for the simplicity of things, let's just keep it the way we are, exactly how we are. So let's say we want to borrow, let's do a little bit more, to about $3,000. So since we're sitting at right now, you'll pay an interest at 6.9% totaling, $17 per month for a $3,000 loan, which is pretty nuts. I mean, that's pretty phenomenal in my book, guys. If you have 480 Nexo tokens in your wallets, you can qualify for that 6.9. I like how they do this on here. It tells you, how much Nexo tokens. I have 500 in here just because I wanted to meet the threshold. But you can see now how if we did take this away, let's take this away now. So this is how much Nexo tokens you would need to qualify, for the discounted rate of 6.9, and of course it'll cost you the amount listed below. So now you're kind of starting to see the outcome and how things are working here, and where the getting paid to borrow comes in now, and how that is so specialized is that you can start to see how, depending how much you're earning on your interest per month, I know Nexo compounds daily, but 8% APY, 6% APY, and as we talked about just on the crypto loan calculator, how you're getting down to 35 cents a day. Most of you guys are earning a lot more than 35 cents a day, especially if you're lending pretty aggressively. I know myself, I do lend out a good amount of cryptocurrency and also stake a good amount of my cryptocurrency, and some of those cryptocurrencies are paying me out from $5 a day to $10 a day. So you can see kind of now how you can really leverage yourself pretty well in this industry, in terms of you are essentially getting paid to borrow, in a sense. So if you keep your lending and your staking percentages spread out, and you have a very structured ladder of how you want to do these things, which I really advise that everyone does have a plan before going into getting a crypto-backed loan, is now you can see how that incentive from paid to borrow is really coming into play now, especially in the lower amounts. I know when you start getting the higher amounts, you'll start having even $2 a day, $3 a day. But most of you guys, if you know much about crypto lending, and a lot about these APYs and how much you can really earn a day when you're double compounding and yielding, especially in some of these yield farms that are giving out 25 to 30% APY on the more DeFi side. But I've seen centralized exchanges also really putting out 12 to 14%. I have seen that very common. So just wanted to really put that out here and make sure none of you guys are confused. But you're starting to really see now how that paid to borrow is coming into play now with these interest payments. You're making more per day and per month passively than the outstanding loan can even catch up. So in that sense, it's really just giving you that incentive to say, hey, come borrow our money. We'll give you a great APR. You already proved to us that you have the collateral, and we will reward you for using our platform and taking our funds to help us continue to leverage yourself and also leverage us. It's a very two-way street with a lot of these platforms, guys. We get to move on to traditional banking loan requirements. So now we get to see the pros and cons and the benefits between traditional banking requirements and crypto banking requirements. So first off, let's start off with credit score history. An applicant's credit score is one of the most significant factors in leading considerable loan amounts, and also percent-wise for loan applications. Income. Lenders impose requirements for income on borrowers to ensure they have means to repay a new loan. Minimum income requirements vary by lender. For example, SoFi imposes a minimum salary requirement of $45,000 per year, an annual requirement of just $20,000 per year. So don't be surprised, however, if your lender, doesn't disclose the minimum income requirements. And of course, this is where traditional finance, kind of gets dicey in terms of, the very wishy-washy way of how they can, distribute your loan to you. We've heard of a lot of dishonesty in terms of predatory loans. We've talked about that in my channel a ton, in terms of not only just people of color, but as well of non-people of color, banks going after individuals who need money fast, maybe aren't thinking in the correct manner, and signing them off on loans that are just, of course, by no any means a financial advisor would give the A-OK for something like that. So also moving on to number 3, in terms of debt to income ratio, it is experienced at a percentage that represents a portion of the borrower's gross monthly income that goes towards her monthly debt services. So looking back in history now, we're seeing previous debt or other issues that we've had in the past, and they will use that against you in terms of giving you a higher APR rate, giving you less flexible options in terms of your periods from 3 months to 12 months to 24 months, etc. Going down to employer and income verification. A lender wants to see your ability to pay back your current debts as well as a new loan to do this. So I actually have heard stories of banks calling employers and banks, giving kind of a debrief of what kind of worker you are, what you do at work, are you late to work, are you on time? I've even heard some stories in terms of people really getting in people's business in terms of your spending habits, and really what you do in your personal time. And there are, it is important, of course, to know your employees of, how they're doing, with their expenses, but then also at the same time, that's really not, much of your business in terms of, banks going out of their way to do this and still give you a terrible APR rate, especially if, the previous finances haven't been well. But in terms of violation of privacy and too much information, I believe that's exactly where this falls into play. And then our last bullet point here, this means every dollar bill is equal to, identical, and interchangeable for any other dollar bills. Since U.S. fungibles, you are deemed to be paying back the exact dollar bills you are borrowed at the loan institution. This is why receiving a loan proceeds from a personal credit or student loan, or repaying the loan in USD, are a tax neutral. And I skipped the first bullet point there. A lender wants to see your ability to pay back your current debts as well as a new loan to do this, and that follows up into our bullet point that we just did. So you do see here, it's a lot more in terms of the traditional finance side to get a loan approved and funded, and even talking about the time frame, it's not nearly 5 minutes like we talked about with the crypto pack loans. It is more of like a whole process in terms of like 2 to 3 months, sometimes even longer. I've heard some very, very terrible headaches in terms of people, even this year with the SBA loan, lots of, I know it was a mad scramble this year, but lots of different steps that you can see now versus the traditional and the crypto back side. So now we're going to be going into some calculate your monthly payments on traditional finance. So here, just for an example, did kind of closely to what we were doing on our crypto back loan side, just give a very accurate comparison. But you're noticing now kind of the difference in terms of, what they're asking on this calculator. So they're asking your credit score, your preferred interest rate, and then your loan term, how long this is going to take you. And this is off the basic, loan construction site in terms of kind of they took all the rates, put them into one site, and then kind of divvied them into the most accurate way they possibly could. So we put $1,000 into our loan amount, and then our loan term is about 12 months, so that's going to be 1 year. And then our interest rate 11%, or your credit score. And I put very good just for the sense of maybe I should have done neutral. We will hop into the site and we'll of course play around with it just like we did in our previous slides. So you can see now the very, very large difference of a monthly payment of $88.38, total paid over the year $1,060.58, total interest paid is going to be $60.58, and the loan amount is going to be $8,000. So let's hop into the website and let's actually play around with this and see exactly what we can fish out and what we can bend to our advantage to give us the best rate possible. Into our personal loan calculator, we have everything set up and we can now play around with some numbers. So I did end up having to look up what the average APR rate was in the United States for an adult. As you can see on the left here, we have a lot more information we do have to fill out: your zip code, your credit score, annual income, loan term, preferred interest rate, your loan purpose, and the loan amount. So just for simplicity, I kept it close to all the other loan amounts that we were doing across the board, just so you guys can get a basic idea. But you can even just see now the estimated payment is going to be $88 a month, and the loan term I just put for 1, just given the amount of that's something we can pay back this year. But now the cool thing is now we have an estimated payoff date, so we can see just how the payment and the principal and the interest can start accumulating in terms of how long it's going to take us to pay this back, and of course how the interest accumulates as the months we do not pay this back. And you can see how it can get it gets fairly can get fairly up there. So the average rate of in the U.S. for a personal loan, is about 9.41%. That doesn't take into account credit score at all, previous history, and also any outstanding loans or debts as well. So this is just really a baseline across the board, and you can apply this to your own personal situation as well. This is just all for example purposes to give you guys the best idea. So this is kind of where we're sitting at. We can play around with these numbers as well. Let's even go back to what we did. Let's do a $10,000, which seems to be a very, very common number. But you can see, like, wow, $876 right there just for the estimated payment across the year, and not nearly close to what we were getting over at our Nexo calculator. If we still have our $10,000 out in here, let's even do a quick comparison. You can just see, we'll go back and forth just to give you guys the real comparison here. Wow, I'm really glad you guys, just got to see that and really see the comparisons of, how traditional finance is really differing from the crypto industry in terms of loan payments and decentralized finance and so on. So we're going to move on to our next slide, and we're kind of going to go over how we can leverage ourselves and give us the best outcome for borrowing some money, using it for our existing investments, and then of course paying back with our own personal collateral that we have built up over the years, or you plan to have in the near future. So some ideas for leveraging crypto-backed loan. Some of these I've done personally and I am currently doing, so I can definitely share my personal ideas. Just, of course, if I say something, I just don't want it to be financial advice. This is just this is a financial opinion. This is completely on me, and these are some of the steps I am taking to utilize my crypto-backed loan in this ecosystem. So exploring other promising investments such as high-quality altcoins, dividend providers, stocks, or APY staking cryptos. So for this example, I would put on Polkadot has a great APY on Voyager, as well with a lot of other great coins such as Chainlink, dividend portfolio boosters such as Store Capital, Stag Industrial, SDIV, some other really great passive income bringers that can, of course, offset your monthly payment of that loan and daily payments of that loan as well, just like we talked about. If you utilize your APY on other yield farms and liquidity pools, even just lending and staking, you're going to be outbeating that loan payment daily and monthly by a long shot. So just like we talked about, that kind of paid to borrow in a sense is a very, very real thing. And if you realize it quick on and you understand your risk tolerance and what you can do to leverage yourself with this, it is a very, very sweet gig that exists in this ecosystem. And add on to existing positions such as Ethereum, BTC, Cardano, Polkadot, whatever it may be, adding on to your existing positions in terms of a leg up, or as we are in a bull market and we are approaching some Q4. Q4 is a very, very heated time for us in this market, and gives back a substantial amount of percentages, as we know over the years, depending how long you've been here. This is your first bull market. Welcome to the show, welcome to the circus. But I'm hoping this is giving you enough information and ideas to leverage yourself and give you the best outcome here. And onto our third, the yield farming / liquidity pools, doubling your passive income for higher yield farms such as Sushi Swap, Uniswap, Pancake Swap, and Aave. We've had other tutorials on my channel that go through how to do this in terms of staking, what APIs are, imperial loss, really to give you the all information needed to succeed in decentralized finance. It's not, I wouldn't even say it's a steep learning curve. It's just simple things that you would need to just watch out for. But overall, education is, like I said, our biggest barrier to entry, and this is something I really do benefit from, and I believe that a lot of people do as well. So those are some just quick ideas. Any other ideas, I'd love to hear them in the comments, or share them with me personally. I love to hear how you guys are utilizing these. I've heard some pretty interesting ones over the years. So perfect. Now let's move on to the good old taxes and events / taxes / other taxes brackets, and some good practices that we can do to keep ourselves safe and also utilize the best we can. So let's go over a taxable event. So a taxable event is any action or transaction that may result in taxes owed to the government. Common examples of federal taxable events including receiving a payment of interest, dividend, selling stock shares for profit, exercising stock options, and receipts of paybacks in taxable events. Make sure to document that involved parties are treating the transaction as a loan, not as a sale. Further, loan documents could have required to return the collateral in the exact same cryptocurrency if possible. Provide to lender to preserve fungible standards and avoid getting a tax on a sale. So let's take a minute and let's break down this second part here. So we just covered what a taxable event is, and now we can kind of see the double whammy suite here, how crypto-backed loans are, very not only lucrative, but a very smart idea in terms of, saving you a little bit of money. So we just talked about what a taxable event is, and now we're covering how this exempts us from a taxable event. So you are taking a crypto-backed loan that is against your collateral, so you already have the money. It is not a sense of you taking a loan to go, pay your rent, or have money that you don't necessarily have. You have this money currently. That's how you're able to get the loan, just like we talked about the LTV, the loan to value ratio. And so with this playing out, now you are paying your current existing collateral back into the loan that you are borrowing. Therefore, you are not making a taxable event in terms of paying for goods or services. You are not executing shares for a profit. You are not exercising stock options to receive a payback or taxable event. You are not receiving dividend payments from your, if your interest is of course receiving if your crypto, of course, is receiving interest, you are receiving taxable events on that. But in terms of your outstanding loan and you are paying back with your existing profits and collateral that you already have, that is not considered a taxable event. As things continue to unfold in the infrastructure bill, and as things get clearer in the United States in terms of crypto-backed lending and proof of stake and so on, we will give this an update. But as of right now, from my digging and my tax research, that I remember last year, if you guys do remember, we had a little bit of confusion on that question. I do remember that was a very, very tough time for the government not giving us very, very clear regulation and kind of clarity for what exactly that meant. But from what my research has told me now, and from what I've talked about from other individuals, this is currently not a taxable event. Taking out a crypto-backed loan and paying with your existing collateral. That is what my research tells me, and giving my double check throughout other individuals and coworkers, that is what they have told me as well. So own due diligence, of course. Consult your financial advisor, your tax guy or your tax girl. But as of right now, this is what I do know as of right now. And any corrections, please correct me down in the chat or anything along those lines, because I would love to know that information as well. Awesome. Now going over to our chain of loans, an easy way to buy at a discounted rate. So we're actually going to be hopping over into that website right now and kind of give a little bit more debriefing. We are almost done here. This is our 10th slide out of the 12. So we're just about to be wrapping up here very soon. Hopping over into YouHolder.com, I'm going to be linking all of these sites that we've covered in the description, so you guys can easily get to these and play around with your own numbers. But of course, let's jump into this. So how to use crypto loans and chain loans to get more leverage and strength in the crypto market, just like we talked about. So what they do really good here, and why I bring this up as well, just in case I didn't do a very good job earlier, even though I'm doing the best I can to carefully analyze and give specific metrics for how this is valuable. But just in case I didn't do the best of job, here is a really crisp and clean example of how this is really leveraged, and I'm going to link this in the description below. I'm not going to go through all this. I'm going to leave this up just enough for you guys to read a little bit, and then I'm going to of course link it so you can of course finish your reading and your investigation. But really the utilization here, they go over a very, very real scenario as to how people are leveraging themselves in the crypto markets with crypto-backed loans. They give a little demonstration here of the key benefits of the values above. So I'll just read the first paragraph just to give you some idea. The key benefit above is this value. The user received 2.8 Bitcoin, the additional Bitcoin for $31,701. Hence, the one BTC only cost $11,270. That's just a 12.7% of the current value. So then imagine if BTC price grows another 15%, you can get 2.812 BTC for less. And then they have their little connection chart here, which I really enjoyed. You can take a couple reads through. I know this is kind of something that's not going to click right away. I had to do some extensive research and of course really work on my own to of course make sure I was understanding the ins and outs. But this is really a more medium to in-depth way that hopefully this can help you guys grasp this a lot quicker than myself, even though I take a little bit longer to learn new things anyway. So that's not really anything terrible. That's just of course everyone's learning style. But as they continue, they go through here at the bottom paragraphs to really explain the best strategies and the moderate risks. They give you lots of different scenarios and ways that you can increase the LTV options, and they give you a very real retrospect idea of how this is utilized in the real world, versus me just going through a PowerPoint. But I'm going to link this below. I'm going to leave this up here about like 20 more seconds, and then we will continue on to our next slide. And any questions, like I said, guys, I'm saying a lot, but any questions, please don't be hesitant to ask in the comment section below, or of course DM me or message me personally. This is something that it's a learning curve for all of us. So this is something that I've just gotten really comfortable with over the past couple months. And now finally wrapping up for our conclusion, guys. So really just my conclusion I want to say here, as you can see, it's clear that cryptocurrency lending has the upper hand when it comes to loans. The pros far outweigh the cons, and the cons aren't that big of a deal. Even though cryptocurrency lending is a relatively new industry, it is technology superior to traditional finance lending in many ways. Crypto lending offers more flexibility, more options, and more security than bank lending. So from my personal view and my experience with cryptocurrency lending on the Nexo platform and other platforms as well, is that it is by far probably one of the best leverage tools that you can have without currently having that liquidity in terms of your APR rates and your lending rates as to what you are paying back. As we discussed this entire PowerPoint, the getting paid to borrow option is very real, as you guys can see as we crunch the numbers. There is a very real term in terms of collecting your APY, staking your cryptocurrencies, and easily outbidding that daily interest and of course that monthly interest. They are essentially they are pretty much paying you guys to borrow, guys. So proceed with caution in terms of how much you're going to take out. Have a plan in terms of what you want to achieve with your cryptocurrency backed loan, and in terms of more information and better ways of understanding. If you're still confused, I will, of course, like I said, link those links below for further reading and investigation. I can link some stories and some group chats for people who have had some questions and talked about this with other individuals of how they can leverage themselves the best. But overall, guys, the real conclusion of this is that traditional finance is still going to be here as we continue to move forward. But as this becomes more prevalent and this becomes more available to everybody around the world, and they can start to really understand the outcome and the way this can really be utilized in their personal life, and not only that, their personal life, but their business and of course their investing life is top tier. So really wrapping this up, what I can really say for my final couple sentences here is that just proceed with caution the way you move with these cryptocurrency lendings. Have a plan with what you want to execute with this. What goals do you want to achieve with your $2,000, $5,000, $10,000 loan? Do you want to be able to pay off the mortgage? Do you want to be able to reach a certain equity goal that you had in your investing New Year's resolution? Do you want to be able to pay the rent or whatever it may be? Of course, just having a plan going into anything is always a very, very good idea. And in terms of this technology continuing to grow, we will continue to grow and achieve great things. I believe in the blockchain technology world. That's exactly why I'm here and doing exactly what I'm doing. But other than that, guys, that is enough for me. I kept you guys here long enough. I hope this really helped you guys on a multiple levels. Subscribe, share, let's send this to friends or family, and anything else you guys need, I'm going to be here. So don't be afraid to DM or reach out. So Patreon is also going to be linked below if that's something you would like to do as well. My lowest tier is starting at $3 a month, pennies a day, in terms of you're going to get information like this, TA, lots of other flexible options such as free coding tutorials and much, much more. So thank you guys so much. I really appreciate it. I will see you guys in the next one. Bye-bye.